Hello, everybody. We'll be just starting in just a moment. Hey, good morning, everyone, or good afternoon. Actually, I'm a little turned around today. Welcome to the webinar. Sorry, I'm trying to start this thing and it keeps on collapsing on me. Hope everybody's doing well. So welcome to this live two-day webinar series subtitled How to Capitalize on Monster Moves in the Markets and Also Avoid the Market Traps. My name is Mark Shawson, the Pattern Trader. We have many of the Pattern Trader members on this webinar, but also a ton of new people. So I want to welcome everybody. Thank you for registering and signing up, and hopefully we'll give you your money's worth over the course of the next 2 days. So what I'm going to try and share with you is a way of looking at the markets. I've been trading for more decades than I'd care to acknowledge or remember by now. I started trading as a junior in college. I was going to one of the best universities in the country, one of the best business schools. And at the time, I was being taught how to analyze investments based on what we call fundamental principles. And I think this is what a lot of people do. They analyze the news or try and analyze or compartmentalize things to break down an investment to decide, where to get in, how to get in, if it's going to be profitable. And what I do is I look at just price action. So I make huge bets just based on little squiggles. They always say, picture's worth 1,000 words. And I really believe that. So I'm going to share with you over the course of the next couple of days a trading methodology based just on what we call price action. So this is called technical analysis, where we just analyze price. And I'll go through a couple markets. I'll share with you how I kind of break down, what I look at, how I break down a risk reward opportunity. And, I'll start off by just sharing with you, I'm very active as a trader myself. So, those who can do, those who can teach. And I like to believe that maybe I can do a bit of both. So I'm a very, very active trader. Whatever I'm telling you, believe me, I am doing in the markets in spades. And so these are some of the positions I've been trading. I came in short today, Caterpillar. It was down about $4. I went long ConocoPhillips. It's an oil company. I also have a huge put position. A put is basically a very leveraged bet on the downside. So I have been betting that the Dow Jones is going to go down. I put this bet on last week, and today the Dow Jones was down 700. And I have just a monumental, huge bet on this. I've got 1,100 put options. I bought between $1.50 and $2, and you can see today closed about $2.55. I'm also short Dick's Sporting Goods. I'm also short this stock called QDEL. I'm long some call options in Schlumberger, and then I'm short in Twilio, which also went down today. So I'll go through some of these trading things. Before I do that, let me just share with you kind of how I kind of do things at the Pattern Trader. What I do is I send out an email every day to those on our elite trading list. These are people who get my emails every day. And these are some of the emails that I sent out recently. This was in gold. XAU USD is the ticker symbol for spot gold. At the end of June, about a month or so ago, I said, go ahead and get short gold at $1,801 based on some price patterns. So what I try and do is share what I'm looking at on the price chart. I draw up the trade here, and then I describe what I'm looking at on these price charts. And so I said, go ahead and short gold at 1,801. I also said sell short silver, XAG USD. That's a ticker symbol for spot silver. And I said silver has formed both a long-term and short-term double top bear price pattern on the daily and the weekly charts, indicating this pair could be poised to go over a cliff. And based on a combination of trades in gold and silver, you can see I made just a boatload. I made $257,000 just on this one trade in silver, $199,000 on this one trade in gold, lost 28 grand in that, and on and on. So this was a trade that I did a couple months ago in the dollar yen. I was telling our members that I thought that the yen was setting up for a once in a decade move higher, meaning the yen was going to collapse against the dollar and other currencies. I started advising our members to buy the dollar yen at 117. Today we're trading at close to 140. So this is what just the analysis of price patterns. I look for the bigger moves in the market, the monster moves. I said dollar yen is broken out of a long-term symmetrical triangle. Recently, prices broke out of a consolidation zone on the weekly chart, which implies this pair is poised to keep going higher. And remember, this was at 117 in March, and now we're at 140, about 3,000 pips higher. Then I also said buy the euro versus the yen, and based on certain trades in those markets, I made a boatload of money in those yen pairs. So I trade all kinds of things. This is another gold, and on and on. This is the pound New Zealand, and so you get the idea. So this is what I do on an ongoing basis. Now, as I said, I started establishing, while the market was going straight up in the last couple of weeks, I've been establishing a monster short position in gold. I'm sorry, not in gold, in this Dow Jones. So you can see I bought the 300 put options that expire at the end of October. So I've got kind of a longer term horizon. I'm expecting over the next couple of weeks and months that the stock market, could collapse in the US. And so I took some big bets on that based on a very kind of not too common price pattern. So again, everything I do is based on price action and price patterns. And so what I'm going to share with you is this ETF, which is based on the Dow Jones Industrials. So this is basically tracks the Dow Jones. This is one of the major stock indexes in the United States. And you can see that over the course of the last several weeks since June, this has really gone straight up. The markets have gone straight up. I think the NASDAQ rallied about 25% in the last couple of weeks. Now, most people are saying this is the start of a new bull market and what have you. The inflation is starting to come down. The Fed is going to relax, and we're going to keep going higher. And I kind of beg to differ. I kind of think that we actually could have a long way to go on the downside here. And so I took this kind of longer term bet that the market was going to turn down. So first off, before I examine what I'm looking at on the chart here, you'll notice that this is just basically price and time. That is all that's on this chart. This is what we call a clean or a naked chart, because you don't see any volume here. You don't see any moving averages. You don't see any MACD. You don't see any, Bollinger Bands. There's nothing on this chart but price and time. So I just look at a very simple picture, and from this picture, I try and extract, where these markets are going to go. Now, I am not an in and out day trader. While this is very much a trading market, and I have been very active taking profits off the table, I'm not looking at a 15-minute chart. This is a monthly chart that goes back to 2015. So I have a very long-term view, because what I'm trying to do is I'm trying to take pieces of the middle out of very big moves in the market. And in order to do that, you have to look at these bigger time frames. And what I'm looking at is the Dow Jones on a monthly time frame. And what I'm looking at is a pretty exotic looking pattern that I see setting up here. When you join kind of the highs this way, and then you join the lows this way, and then you go that way, and then you go that way, you have this funky looking diamond pattern. Now, the market kind of traces out all kinds of patterns. You can see here, there was a perfect reverse symmetrical triangle. So what I try and do is, look at the tea leaves. I try and look at the waves in the market, and from these things, try and deduce where and what the market's going to do once they break out of these patterns. So now a diamond price pattern is usually a reversal price pattern, where the market leading up to this pattern was going higher. If this is a reversal, we can expect something like this. And that's basically what, I am expecting. But sometimes the markets, look at these price, as opposed to a textbook, what I do is I look at the pattern, and then I observe what does the market do in reference to the pattern. I mean, obviously, if this keeps going straight up, I can't just say, well, this is a reversal, I'm going to stay short. So sometimes these are what we call neutral patterns, where the market can either go up or down from here. But when I started shorting it, I surmised we were at what we call an inflection point, where we'd come right up to the peak here of this diamond. And this is exactly where I started shorting into this rally last week. I actually got a little bit seasick. I started shorting the Dow Jones at 338, then 339, then 340, and it went all the way to 343. I was getting pretty seasick, and I, thought I made a huge error here. Now, I'm still not out of the woods. You can see the market has sold off, but, I'm still out of the money on these things, and we'll see how it goes. But to my mind, what I look at is patterns, and then I look at what we call price action. So this is a monthly bar. This range from high to low is everything that's occurred in the month of August. And, so I'm going to look to see how this bar closes relative to the high and low. And what I'm hoping is by the end of August that we close on the low of the month, somewhere around the low. And then this to me would be what I call a key reversal, where you make a new high, and if it closes on the low, this will be very instructive to me, and it will kind of confirm that I think I'm on the right track here, that this is what I think is going to happen in the markets. Now, most people are saying, well, we could go sideways. Some people are saying we're going to go higher. It's been one of the most difficult market environments that I can remember because of all of the different supply shocks and wars and things of that nature. But what I advise you to do is drown that out and simply look at price. And that's all I try and do. So I'm going to share with you at the end of this, my book. I have a 4-step trading plan where, what I try and do when I open a chart is I say, okay, what is actually happening here? Is this market going up? Is it going down? Is it going sideways? And this one, it's a little bit hard to tell from the monthly, but to my mind, there are most people would say there are 3 stages of the market, where principally markets can go up, markets can go down, or they can go sideways. To my mind, and where I make most of my money is on the turn, where a market goes down and then turns up, or goes up and then turns down. But to my mind, before something turns, there's always a chart pattern, a double top, a double bottom, a head and shoulders, in this case, a diamond pattern. And so I am trying to anticipate moves and trying to get pieces of moves once they move from one direction to the other. So I will trade all of these things, but I don't want to trade a sideways market. I'm not looking just to duke it out with my broker, try and take 7 pips here and 15 pips there before my broker carves me up. I am trying to extract the bigger moves in the market. So, when you look at this chart, it's principally a very uptrending chart. But buried within here, I think I see a reversal price pattern where you kind of see, kind of this funky V-shaped top or this diamond top or whatever you want to call it. But I think that we are in the process of turning from one direction to another. Now, this is still somewhat ambiguous. So once I kind of think that I see a direction or a pattern, then what I do is I look for confirmation within that. And that what I'm saying is that's what I'm looking for in this. I'm looking for this to reverse and give me, a feeling that this key reversal is then going to give me a risk reward relationship that I can understand. So once I understand the direction and the chart pattern, then I look for what I call my insurance day bars. This is my own little slogan. So now it can be this is a monthly chart. So it can either be insurance month, and what an insurance bar means basically is that it tells me where the risk is and where to join the trade. So for instance, if we basically had this reversal, I would simply know where to join the trade and then where my risk is. And so this to me is the holy grail of trading. And I'll drill it down on a smaller time frame so that you can understand it. So there's really 2 forms, and I'm going to share with you my book at the end, and it'll kind of encapsulate all of this. So this is what we call a key reversal, where a market kind of goes from one direction to another in whatever time frame you're looking at. So if it's a daily chart, a weekly chart, so that would be a key reversal, where a market makes a new low intraday and then closes on the high. And you can see that here is a little reversal that then pointed in the direction where this is going. Now, I don't just look at these reversal pattern, in a vacuum. There was a pattern here and then a play off that pattern. And so that is one form of an insurance bar. The other thing is what I call my inside day or inside month or inside week, whatever time frame you're looking, the inside bar. Now, an inside bar is simply, again, what it sounds like, where you have a trading range that basically sits. You can see that from high to low, this range sits within the high and low of the previous day, and it sits really within the previous day's range. And to me, this basically just indicates that we are coiling and we're likely to uncoil in the direction as indicated by the key reversal. And I'm looking at a bunch of oil stocks today, and I'll give you a tangible example of this. And so once I kind of see the direction, the chart pattern, the insurance day bar, then I just layer it all with a last step where I put a buy stop in a market that I want to. So let's say I'm looking at as a setup. I would just simply put a buy stop above these prices. And I'm going to show you some examples. Or if I'm looking to go short, I would put a sell stop below the market. So let me just finish what I'm looking at here on the Dow Jones. Let me just go. So I'm going from the monthly. Now I'll go to the weekly. So this is the Dow Jones Industrials. And so when we look at this chart, it basically looks very sideways. Up, down, sideways, we can, it's really looks like a pick'em. But when I look within this chart pattern, what I see is this double top. It looks like the letter M. So this is a reversal price pattern. When prices go up here, they hit this reversal price pattern. By definition, a reversal is a reversal of trend. And so you can see this is what I mean by a key reversal. Last week, you made a new high and you close on the low. And so it's no shock today. We're down 700 points in the Dow Jones off that key reversal. Now, again, I look at this reversal in context with this pattern. So to me, this is what I call a governing pattern. To me, even though this took place several months ago, this is going to govern and dictate the market for maybe months, weeks, maybe years from now. And so this is what I call a governing price pattern. And you can see after this price pattern, you had a key reversal here, made a new high, close on the low, and then you had a sharp move down. Then you had another key reversal here, made a new high, close on the low, and then you had a major reversal there. Now you had a key reversal here, and I'm surmising that it's not going to be straight down. I think it's going to be pretty bumpy. But you can see that, you know, we've been kind of in this little tight channel here. And now today we broke out below this channel line. And so I do believe that on balance, that this thing, you know, should come down. Now it's a very tricky in here. It's, you know, when you go straight up, you don't typically go straight down. So this is, you know, very tricky where you kind of have to, you know, take your profits and, you know, be on your way. So that's the Dow Jones. I'm going to share with you the S&P and then I'll move on. So this is kind of at a high level how I kind of break apart. So there's a lot of confusion. What is Powell going to do? What's inflation going to do? What are oil prices going to do? What's the economy going to do? Are we going to go into a recession? So, you know, if you try and analyze that and try and, you know, come up with answers, that is just no way to, you know, to effectively trade. To me, I always look at the market for a guide. So this is the S&P 500. And again, when we look at this market, it has been a very uptrending market. But like all good things, trends do end. And when they end, they put on a pattern that indicates that that uptrend has ended and likely to turn. So what I see in the S&P right now are three major bear price patterns that we are just at the cusp of. And if the market kind of breaks them the other way, then, you know, we'll know something also. So what I do is I put my structure, my boundaries around prices, and then I see, does the market confirm what I'm looking at, or does it go the other way? So there are three major patterns that I'm looking at the S&P 500. The first one is what we call an ascending broadening price pattern. You can see throughout this entire price pattern, prices have been ascending, and it starts out narrow in the pattern and then it widens or broadens at the top. So that's how it gets its name. It's an ascending, broadening price pattern. Now, these are typically reversal price patterns, but they can also be neutral, meaning that the markets can, you know, reverse from here or go the other way. And so what I simply do is put a boundary here and then watch to see how prices go. I mean, if prices started coming back here and started going through here, I would get long. But you can see how we broke through here, the bottom end of this thing. We broke lower, and then for the past 3 months, we've been going, and we came exactly to the lower end of the support line. Now, gold did exactly the same thing. So now, you know, maybe this is the first time you've ever heard of price analysis or technical analysis. You're going to go and Google, does price analysis work? But, you know, look, this is what keeps me trading, because I find it just quite unbelievable how prices, through all kinds of outliers, pandemic, supply shocks, Federal Reserve policy, all of these things, and look how evenly price bangs into a certain region. and then either supports or rejects right on the dime. And so to me, this is, I never get tired of seeing the beauty and the elegant of seeing how price works. So you can see now we banged to the top end of this or the bottom end of this thing, and then we got rejected in the form of this key reversal. You can see last week we made a new high, we closed on the low, and so to me that is pointing in the direction this wants to go. Now, I don't think it'll be without, some kicking and screaming. We may go back and consolidate this and then roll over, but I do think that we are looking at a major inflection point. So this is, number one, an ascending broadening price pattern. Now I see a second price pattern right here, where you have this double top, where you make a new high, you back off the high, you retest the high, and now basically you have this M top sitting astride this thing. And so to me, this is the cheat sheet, the trading for dummies. This pattern is telling me that over time, this thing should go lower. Now, nobody's really forecasting this thing going off a cliff, but I think there's a very good chance that it could. I mean, I think we could get a mammoth downswing here. Now, the third pattern that I'm seeing is this megaphone top. So this looks like a megaphone that you kind of see like a coach from the sidelines yelling through. And so this is a megaphone top. And again, to me, look at this. 3 months of rallying, and it takes you exactly there. And I would surmise that you're going to look back and look at that as a top of this megaphone top. And so I just think that, we're going to go like this. And so I put on a huge bet in the belief that this market is going to crash. Absolutely crash. Most people are not predicting it. And that's why, I think it could really be vicious. So you can see we've been in this very tight channel, and now we're kind of breaking out, under this very steep uptrend line. But, again, what I've learned, hubris is not a good word to be, to have as a trader. Hubris is arrogance. So you never want to have something that's set in stone. So what I do is I look at this pattern, and then I set up a certain expectation where this is basically what, I would expect to see. But if, all of a sudden the market starts doing this, then all of a sudden all kinds of red flags start going off in my brain. And then I will do something just because it didn't do, if it's not going to do one thing, it's going to do another. So, if this doesn't go down, it's going to go up. And so basically I just put my boundaries, my structure around prices, and then I surrender to the will of the market. To me, I'm pretty good at what I do, but, I'm wrong. But the market is always right. The market is always right. So wherever this thing wants to go, I will surrender to that direction. But, at least by putting boundaries, I can understand when something comes here, it should do this. If it starts doing that, then I'm getting out, and I'm probably just going to take the other side because it didn't do one thing. So this is how I'm looking at the market. It's very complex. There's a lot going on, but this is how you try and demystify it. Just be objective. Just look at price. To me, price is a discounting mechanism. Price is ahead of the news. Price is anticipatory. So to that end, when was this? This was last year, exactly a year ago. I've been telling our members to short Zoom stock since $600. This was in August of 2021. I mean, exactly a year ago. And you can see the price of Zoom, ticker symbol ZM, was trading at $372. And I said short that at 372. Now, Zoom just came out with earnings tonight, and you can see that it's getting just decimated in the aftermarket. Zoom closed at 97.5, and it's trading $7 lower. in the aftermarket. So this price has gone from $370 to $90 in the last year. And I've been telling our members to be short this ever since then. In fact, last Sunday, I said short Zoom at 100, and now it's trading at 90 again. So this is, to my mind, and I talked about an ascending, broadening bear price pattern in Zoom, as an ascending, broadening in gold, an ascending, broadening, and they all have the same implications. So before I go on, maybe I will, what I'd like to do is take some questions on the methodology. I don't want you to ask me to look at a ton of different charts, because really what I'm trying to convey here is a way of looking at the markets, a way of understanding the markets. And if you like what we do, then I have, many things where, we go into look at all kinds of markets. I take questions and answers in something called the Underground Trading Sessions on Friday at 11 o'clock Eastern time. I go and look at all the markets, and then everybody in that, particular webinar gets to ask whatever they want. So this is not a forum where I'm going to go and look at 1,000 charts. What I'm trying to do is convey a way of looking at the markets where you don't have to understand Fed policy. You don't have to have an economics degree from MIT. All you have to do is understand price. Price tells you where price is ahead of the news. And if you understand price action, what I try and use price action is to carve out monster moves in the market, where I try and take a piece out of the middle of these monster moves. So Samuel says, I assume these patterns apply equally on a shorter time. Now, I always get that question. If you're doing this on a weekly, can I do this on an hour? Can I do this on a 15-minute? You can. You will always see patterns on that. But to me, the shorter the duration, the more you're kind of getting into a gambling mentality, because the markets will show you patterns on an intraday basis. But, let me go and see, but you won't see the history. You can't understand. So, if you're looking at, maybe, so I would not encourage that. The reason why I look at monthly, weekly, and daily, because look, I'm trying to take a piece out of the middle of big moves, and you cannot see this on a 15-minute chart. So, people always ask me, because the thing is, you guys want to just trade more. And I understand that. I'm a trading junkie too. But I find when I'm trading too much, I'm over trading, I'm not seeing the big picture, and I'm not taking. So I would advise you to stick to the daily, the weekly, and the monthly. So even when you look at this S&P on the daily, it looks a little funky. So it just, the weekly helps me sort things out. So sometimes when I'm a little bit ambivalent, I kind of, check out these higher time frames. So this is the daily time frame. And, if you're looking at the S&P chart here, you could say, well, this looks like, a double bottom, triple bottom, whatever. It's broken out. It looks like this thing's going higher. But to me, this is a continuum of lower highs. This is just a, downtrending chart. And you can see how these highs just bang one against the other. So I think that you're going to come here, make a bit of a head and shoulders, and then keep going down. So yes, you can do it on shorter time frames, but to my mind, what I'm trying to do is take out the bigger moves in the market, and you cannot see these moves on a shorter time frame. It really becomes gambling. Richard says, do you always use the monthly candle high and low for your stop loss? Well, no, I look at the monthly, to get a global view. Then I look at the weekly. Then I try and set up my trade on a daily or the weekly. Monthly is, a big time frame, but you can, what I'm looking for is, I'm looking for all of these things to close on the low of the month. that will really confirm to me that, that, because it's still an open question whether those June lows that we put are they going to hold? Meaning, if we put the bottom in. And so I'm kind of looking for confirmation. So you can see how the S&P came exactly to the top of its monthly trading channel here. And now, it looks like it's going to settle at the low of the month. Well, we'll only know in about a week or so. And, to my mind, so then we'll start gravitating within this channel. So, how do you look at the QQQ? Rich says, for me, the challenge is to go to the high time frames to see the patterns. I agree with most level, and most traders are a day or below. Yeah, so if you're trading 15-minute chart time frames, you're really gambling. So I really, tell our members to trade either right at the beginning of the day or right on the close. So I made a bunch of bets right on the close. I bought some of these oil stocks right on the close. So ConocoPhillips, so this is ConocoPhillips. It's an oil company. Ticker symbol is COP. And again, really what I'm trying to share with you is a way of looking at charts. So there's actually a sequence of charts, a sequence going on here. And I'm going to share with you something in a moment that will kind of blow you away. So what I see with ConocoPhillips is this double bottom right here. And then you kind of have an inverted head and shoulders. So an inverted head and shoulders looks like just an upside down version of it. So a head and shoulders looks just like a man or woman's left shoulder. The peak is the head, and that's the right shoulder. And that's a reversal pattern for a market that's going to go lower. An inverted head and shoulders is just the opposite. We have the left shoulder, the peak is a little lower, and then you have this, and this is a market that's going to go higher. So this is basically an inverted head and shoulders. And then you cut through the neckline, and now it projects that the trend is going to go higher. So I'm looking at this as a governing pattern, and then I wait for a certain bar that tells me where to join this trade on the upside and where my risk is. So, today we had this, and this is, I bought it right on the close, and we'll see what happens tomorrow. But, what it tells me is that this made a new low today. And by the end of the day, the buyers were in control. And so this tells me, where to get in the trade and where my risk is. Now, typically I would advise you just put a buy stop above the high, because tomorrow we could just open and go straight down. And so what I like is the market to confirm what I'm looking at. I got a little aggressive. I stepped in, I bought it on the close. But tonight I sent out an email to our elite traders saying, just put a buy stop in at 105.75, just above here, just to confirm and let the market do all the work. So tomorrow the market could open lower, mess around for a couple hours. And then if it goes through your buy stop, then you'll be put into an effortless trade. But this is an example of something that, I'm looking at to, keep going higher. You can see that we've kind of formed this little mini channel here in addition to, so I think we're right at the bottom of the channel here, and, we're looking to go higher either way. So I think that this just has a lot of ingredients where it's a very favorable risk and reward. And, if I, get in here and it goes lower, I'm not going to care. I'll risk a few dollars, but I think that this is a good bet. Now I want to share with you a sequence of trades that looks like that I did many years ago. And so you'll be able to appreciate how price action repeats. Price action is timeless. And when you see certain things, So I'm just trying to find this one trade I did. Again, it was many years ago. Here it was right here. And what I want you to notice is the sequence. And so this is a trade I did many years ago in Facebook, where you can see it set up this reverse triangle. When I joined the high and the low, you kind of have this downsloping thing, and you have this reverse triangle. Then it dropped out of the reverse triangle. It put on a bottom, and then it went on and made a new high. Now, I'd seen this pattern, many times before. And I when it was down here, I said, this is going to go and make a new high. And I actually put some real money on there. This was the sequence of trades that I did. So you can see right here, when it double bottomed, I bought the stock. I bought Facebook at whenever it was, 155, rode it to about 168, and I made about 6 figures on that trade. And then when it dumped out of here and then made this key reversal, instead of buying the stock, I got very aggressive and I bought these call options. A call option is a bet on the upside, but I bought way out of the money, meaning that when I bought these call options, the stock was trading at 160. And I was buying these call options all the way up here, $185. So that was just a crazy bet that this thing would keep going much higher. I was buying these call options for 30 cents. And when I got out of some at $4.50. I made 1,500% on those options. But again, it was based on this understanding of the sequence. And I'm seeing certain oil trades now in the same sequence. And so I made, a boatload of money on the stock and the options, well over $500,000 on that trade. Now I'm looking at, Conoco and Schlumberger. You can see here is this reverse formation here. Then it dumped out, made this double bottom. And now, I'm surmising that it's going to go and make new highs. It will probably follow the same sequence as that. So you can see today I bought a whole bunch of options in Schlumberger, SLB. It's not as aggressive. So you can see SLB. I bought 350 call options, 30 grand worth, that expire on the end of next week. SLB. Now you can see that SLB is doing the same thing that Facebook is doing. And, maybe we'll have the same results. So here again is this reverse triangle. You dumped out of here, made a low, did the double bottom, and now you've kind of just been, forming these higher lows. And today you kind of had a mini reversal. So now let's see, what it does. I may be completely wrong, goes back down here. We'll see what happens. So with a call, I can only lose what I put up, but I can lose everything that I put up. So, and I put, a decent amount of money in that thing. And I just think that there seems to be, a lot of space that this thing can go into. So that's what these oil, a lot of these oil stocks are looking like this. They had this reverse wedge. They put on this double bottom. And now I'm surmising they're going to go that way. So this is what I do. I just look at price action. So I look at patterns, then I look at reversals, and then I make a play. Now I jumped the gun on this, and what I would, the way to be conservative is let the market confirm that. So what I would do is I'd simply put a buy stop above today's high and let the market confirm you. So if the market kind of craps out tomorrow, no harm, no foul. You get the best of both worlds. You're not put in to a market that fails. But on the other hand, if it messes around and then it triggers you, you could be put into an effortless trade. And then basically I would just put a stop loss under today's low. So to my mind, this is my risk and that could be my reward. So I'm always looking for a risk-reward relationship that is much bigger than one-to-one. So most people are trading, certainly in the FX market, for very small outcomes, meaning that most people are trading for 10 pips or 15 pips or 20 pips. And if you're looking for 15 pips, you got to risk 15 pips, and then you got to cover the spread. And, that is a one-to-one relationship, or even worse, where basically you're making just as much as what you're risking. And so you got to be like 90% correct every single day on your trades. And that's why most people are losing. So, most people in the FX market lose most or all of their money within 3 months. The statistics show that 90% of people lose their money in 3 months. I think it's much higher. And I think it's primarily because of this. People don't understand, if you don't have a big enough outcome, you can't win over time. So what I basically look for trades is where I have at least a 3-to-1 risk reward. So if I'm going to take an FX trade, I'm going to risk 50 pips to make 150 pips. I will not do an FX trade unless I can see my way to make 150 pips. And it's the same thing here. If I'm going to risk $2 here, I'm going to, risk 2 to make 6. And if I can get 3-to-1 on my trades, I can actually lose 72% of my trades. So you don't have to be 90% correct. It's a myth that you have to be win more trades than you lose. To me, it's what is the quality of your winners. If you take a huge run and you take a whole bunch of dough out of this trade, you can lose a whole lot on the next several trades. So it's the quality of your wins versus the the number of your losses. So Sohail says my risk reward is 5-to-1, but my accuracy is 30-50. But if you're getting 5-to-1, Sohail, then it doesn't matter if you're only 30 or 40% correct. So John says my problem pre-mark was over trading. So good to see you again, John. John's on every one of these webinars. Let's see. So people are asking about Euro USD. I'm not going to, I'll look at the Euro USD, but I really want to kind of, yes, I am bearish on QDEL. Sai says, I never look at news, weekly and monthly charts. So Sai, that's the way to go. And I'm surmising you're probably a profitable trader. So the whole thing is to be objective and to eliminate the noise. So there is so much noise and volatility and themes and counter themes and news and more news. What you need to do in trading is to drown it all out. And that's what the weekly and the monthly charts do. They drown out the noise. See, if you look at something like this, it becomes smoother. You don't see that volatility. So when I look at this weekly chart of SLB, I see it started off with a very foundational double bottom. And so this is the pattern that is leading this thing, higher. And then you kind of had this breakout here. And now it looks like you're going to go right back up into this area. It just looks like you've been coiling. And the more you coil, you can see how we're just coiling in this reverse wedge. And it just feels like this wants to take a poke north. This seems like a kind of a reverse broadening pattern. And I just feel like this wants to go north. So yes, all you want to do is slow down the noise and make risk and reward relationships. So here is what I call an inside week bar. So obviously this is the first day of the week. We don't know where this is going to close, but let's say this was Friday and this is what we saw for the week. I would look at this as what we call a coil. And to me, when I see a coil, it's just a building of energy, a storing of energy. And to me, it's going to release in the direction as indicated by the pattern and the trend. So you have a bullish pattern, you have a bullish trend. You can see that over time, you've just been making higher lows. So I'm, surmising that you're going to uncork in the direction of the trend and the pattern. So the way to set up these things is basically put a buy stop here and put a stop loss there. And so this is your risk and that's your reward. And that's how you make a lot of money in trading. When you can identify trades where you have a small amount of risk, if you get in here, this is your risk and that's your reward. And it doesn't matter if you lose that, that little amount of money. I probe all the time, take small losses, but when you're right, you go for a walk on the wild side. And that's how you make big money in the market. So Hale says, do the breakouts in lower time frames work? Like I said, the lower time frames are, no, you can see a double top on a 15-minute chart, but how far will it extend? It won't be the same as seeing a double bottom on a weekly chart that takes weeks and months to put together. So I recommend, the lowest time frame I look at is a daily chart. Do you send out alerts every day? Yes, Dave, I send out alerts every day. How do you choose your options or price entry? It really depends on, so for Schlumberger, I said, okay, I want to give myself a couple of weeks to let this thing work out. You could see, when I did that Facebook trade, I think I gave myself 3 or 4 weeks. I mean, I bought those things way out of the money. So the more time you go out, the more expensive it is. So I bought the 38 put options, which are, call options. You can see it right there. I bought the 38 call options for about 80 cents today, which means that this thing has got to go to about 38.80 by the end of next week, by 2nd of September. So it's got to get there just for me to break even in 2 weeks. And then if it goes north of here, then, we'll see what happens. So I paid, 88 cents. And this is times 100 shares. So it's $88 for each call option. So, every call option is based on 100 shares. So let's say hypothetically, in 2 weeks, this is trading at 42 bucks. Then I'll make, 300 or 400% on my money. So if my break even is 38.80, and this is worth, $3.50, whatever that is, it's like 400% on your money. So that is, a hell of a way to leverage your money. So I do options when I think that, something is going to go pretty quickly. So this has done a lot of work in here, and it's either going to work or it's not. I'm going to know tomorrow or, very, very shortly. This is either going to work or it's not. You can see we've been going up here. We've been hovering here, and this is either going to get kicked back very quickly or I'm going to be right. So the more this thing coils, and it might just need to do a little bit more work in here. That's why I gave myself 2 weeks to see what happens. So, this is just doing a lot of work up here. And so I think that, increasingly I've got a good chance that, this thing can break out of here. But it's very risky to do an option. And so I don't want to kind of induce you guys. If you're new, do not do options. Teet says, I love your approach, and I really love to start looking at daily and upward timer. I really love to trade maybe 3 trades a week and live my life, not what I've been doing so far. I've lost more money than I've been expected. So this is a way, so I call this really a set and forget. system, because I look at this setup. Here's my setup. Here's my double bottom, my inverted head and shoulders. So this is my chart pattern. So based on this, I believe that this is a bullish chart pattern. We're starting to see chart that indicates that this thing should start going north. And so once I kind of start off with my premise, then I wait and I look for a certain bar. Here's my key reversal. Made a new low, closed closer to the high today. And then, like I said, the best way to do it is to confirm it. Just put a buy stop above today's high. Today's high in Schlumberger was 37.42. So just put a buy stop tomorrow at 37.50. And that's what I would do. So, and this way you can go about your life. You can have a job. People say, well, I have a job. I can't really trade. All you have to do is put this, put a buy stop in at 37.50. Put your stop loss under here. And now you've got your trade. You don't need to monitor it. You don't need to look at every 15-minute chart. You don't need to find some Bollinger Band moving over, when the cow jumps over the moon on Wednesday. So to me, pattern equals trajectory. When I see a pattern, it leads to a move up or down. So you can see here was the opposite. So here we have a double bottom. Here was a double top. And just upon noticing that, you could have been put into a sizable move. So now I see this is kind of a couple things where I feel like this is going to be a bear trap. So you can see that anybody who chased these lows under this line, now if this thing starts, now all of these people are trapped. And when there's a trap, this thing can uncoil very, very quickly to the other side. So I see a trap, I see a pattern, I see a reversal. And so to me, whether I win or lose, at least I had a gestalt. I had something where I could line up a trade based on very empirical evidence in the market, not an analysis of what the Saudis are going to do. Are they going to cut production? Is U.S. demand going to go down? Are we going to have a recession? None of those calculations. I simply made a risk versus reward. I got in here. This is my risk. This is what I'm looking at. It's either going to happen or it's not. And if it doesn't happen, I'm going to move on to the next one. And that's what I do with all of my trades. What's your selection? Mike says, what's your selection criteria for choosing stocks, indices, commodities? I'm just always looking for risk and reward. I'm looking for a pattern. So to me, if I can find something where the risk reward is very tight. Now, sometimes if you start missing a trade, right, and you want to start even shorting here, which you probably, you could have, but then the risk reward calculus gets, very, if you get short here, where's your stop loss? So there's certain times where it gets harder and harder. So I just look at things that set up where the risk reward calculation is in my favor. Right now I'm in the stock called QDEL. It's just kind of coiling at the bottom here. And so this is something where you can see we've had like a 5-day coil in this. So I'm short this stock. I have been since 99. And you can see that we've had 1, 2, 3, 4, 5 days, all trading within the range of that. So this is a coil. And, we're also kind of making lower highs. So to me, this should break to the downside. But we're kind of, we've got a little, sometimes you can grab support here. So I'm going to see how this kind of looks tomorrow. And I may just peel out of some of these things. If this thing doesn't make a new low, I might just get out of some. But somebody asked me about the euro, and then I'm going to leave it there. And then I'll kind of, it's all explained in my book, and I'm going to put that a link to my book in a moment. So somebody asked me about the euro. So again, I'm going to, reference a long-term monthly chart going back 14 years. So this is something you can't see on a 5-minute chart or a 15-minute chart. And so many months ago, I predicted that the euro was going to go make an all-time new low. I don't have a crystal ball. I don't have a hotline to Jerome Powell's office. All I look at is patterns. You can see this has been in a descending triangle type of pattern. And so this is, the whole history for the last several years is lower highs. And right here, you had a double top, head and shoulders, right at the top of this neckline. So this is, we were bumping into this neckline right on the S&P. This is where we hit this week on the S&P. And I'm surmising that you could see something like this. So when you get to these resistance levels, the market pays attention. So this has been a long-term descending triangle. You can't really see it in here, but prices actually started when the euro started all the way from like 80 cents and went all the way up. And now we broke this. So this is a reversal pattern. So I think we will go down to 80 cents again on the euro. I think we're going to go much, much lower. We're just starting to break out of this major levels. You can see that we just started to break out here. So this is a major breakout. And once these breakouts start, they don't just end here. It's not just going back up here anymore. So I think we're going much lower on this euro. So this actually explains my 4-step trading methodology. Very easy, much better probably than I did on today's webinar. I feel like I was kind of rushed. I'm sorry if I was. I'm sorry if I went through some of these concepts very quickly, but this explains it very well. So this is the Trader Handbook, and basically it's a pay what you want. So that means you decide the value, $5, $10, 20, 100, whatever the value you want. And then I will take that and basically contribute 100% of that. All the proceeds go to the American Childhood Cancer Organization. So this is an organization that takes care of kids with cancer. And I've donated over $34,000 from all of the royalties from everything we sell on our website and these webinars. I don't get a cent of it. Whatever you decide you want to gain in terms of the value from this book, I will take that contribution and match it to the American Childhood Cancer Organization. So Sai says, keep your eyes open this week. I think what Sai's referencing, at the end of the week on Friday, Jerome Powell is going to speak at this Jackson Hole Symposium. And the market is really keen on where he'll take monetary policy. So they'll be hanging on his verbiage. And so Teet says, I bought your book halfway through. How do I get on your elite email list? So Teet, thank you first off for asking. Tomorrow after the webinar, you'll get a link from our team. I'm not going to sell you anything on this webinar. This is purely informational. If you like what we're offering, then you'll get a link from our team, and you'll get to talk to somebody. The elite program is not something that we offer on our website. We don't just sell it to anybody. And so for those of you who are interested, sign up, book an appointment with one of our team members, and they will walk you through everything that's involved in the program. But really what it's broadly designed to do. So most people focus, on what did the trades do? So I'm trying to find what so this week I sent out why is this here? Sorry, I'm just looking for the email that I sent out on Sunday. Sorry, my email is not updating. I can't find it. Thank you. I learned something from you new every session. Michael says, so you're welcome. So yes, Duncan and John Weaver and many people have been on this for many years. You can ask them about that. Don't believe me. And also tomorrow I will share with you my link to our review website. You can see what 300-400 other people have said about the program. So really what I'm trying to do is share with you a way of looking at the markets that will free you up, will liberate you from all of the misinformation out there, all of these guys on TV, all day long kind of spouting off things that I just can't believe. I mean, these guys are clueless. So to me, it's all about price. Everything's about price. I'm sorry, I don't know where my email disappeared to. So all I try and do is share with you a way of looking at the markets that will empower you to kind of be able to evaluate anything. Gold. Sorry, I'm just trying to, and I should have done a better job of. So a couple of weeks ago, I sent out in the middle of this rally. So this was August 7th. So 2 weeks ago when this rally was getting going strong, the headline in my email was, I said, it feels like picking up quarters in the middle of the freeway. And what I meant was, I feel like the recent stock market rally is on its last legs, and chasing the last gasp of the upward trend is akin to the dangers of picking up a quarter in the middle of a busy freeway. And so, that's exactly what happened, was that this was what was happening at the time. The market was rallying, and if you don't understand price, sometimes you just get caught up in the action. And this is what most people, focus on, and especially if you're looking at short-term charts, it's very easy to get caught up in the noise. So right around here, I said, look, if you start chasing, the last rally, the last gasp on this thing, you're likely to get gassed. And so that's what I was talking about just 2 weeks ago when the market was on its way up. So why was I, so how would I know that this is just going to end? And the only way to understand that is if you understand, the broader patterns, the broader ways of the way the market. So look at how this just hit right on the nose and failed. So now, maybe we come back up here, but I do think that we are going to fail again. And most people, have been predicting a renewal of a new bull market. Now that could happen. And I will be, watching this. If this thing all of a sudden starts putting itself together like Humpty Dumpty, then I will, surrender myself to the will of the market. So, Let's see, Eduardo, thank you so much for your great mind. How it looks, Jesse Livermore. Thanks, Eduardo. I can just say to everyone, cut out the noise and truly try and understand what markets see. It's priceless. I totally lost. Let's see, today's video only. So the book is a downloadable version. It's very quick. Somebody said, I have no time. Natalia says, thanks a lot. I always find your sessions very useful, very professional. So thanks again, Natalia. Natalia is also a member. So there are a lot of members here. You can actually pick their brains. Don't believe what I'm saying. And really, I'm just looking at the market, just like everybody else. Alan says, my head is spinning, but it's been incredibly lightening. And I can now see a much better way for me to trade. Many thanks. You're welcome, Alan. Bryce says, this is great. Teet says, how much money should I really start with? So Teet, obviously everybody's financial situation is different. Obviously, say don't put your last dime in the market, trade with with money that you can afford to invest or trade with. But to me, most people focus on my program as well, here's the signal, and how much money can I make? To me, what I'm really trying to do is trying to enlighten you as a way to educate yourself, to free yourself up from me or anybody else. So what this is really an education program. People always kind of conflate it. This is not a money management system. This is not a signal system. I'm not putting in trades for you. If I put in trades for you, you wouldn't learn a thing, right? So what I'm trying to do is show you a way of looking at the markets. So whether it be gold or gas or the euro yen, you would have a prism, a paradigm under which you can understand price. And then it would free you up from, being, reliant on thinking that you have to analyze everything or understand things. So, understanding is really counter to effective trading. I really want to, I'd like to have the mind of a 6-year-old. I'd like to be dumb as a wall, just be completely objective and just look what is in front of us. And the problem is, the more information we have, the more things we have in our brain, the more it just, creates clutter. So you've heard of that concept of design called feng shui, where you take out all the clutter so you can let the good energy come in. And that applies in design as well as in your mind. When you have too much clutter in your mind, it's impossible to be a good trader. And so if you're trying to factor in, where's inflation going to go? Are we going into a recession? What's Powell going to say on Friday? Those are things that are just counter to effective trading. To me, trading is about risk and reward. I see an inside bar day right here where you see a small amount of risk, where, I thought the thing was going to turn. I start buying put options here. This is in my mind where my risk is, and that's my reward. So to me, trading is about risk and reward. Where can I get in something for the smallest amount of risk for the biggest increments of reward? And that's, what I'm looking at. And about 3 times a year, I take out my elephant gun and just get on board these sizable trades where I make, I can make up to 7 figures in one trade. And so trading is, it's not about razzle dazzle and making money every day. It's waiting. The markets, it's patience. The markets take time to set up a pattern. They take time where they mainly going sideways or going back and forth. And then once they resolve themselves, if you can identify it, you might just make 2 trades a year and make all your money in those 2 trades. And most people don't understand that. Most people are trading very short-term time frames and getting the FOMO, the rush, the action. But if, the whole thing is you have to decide what you want out of this. And I'm looking for big moves in the markets. They don't come every day. They don't come every week. T says, thanks, Mark. It's been a real eye-opener. I love this approach where I can take my time and analyze the next trade. Much appreciated. You are welcome. Let's see. Agree the noise and clutter. Let's see. Karen says, highly recommend. I've been with Mark 5 years and I've learned so much. It's still learning. His reverse triangle double bottom. I've seen it 5 times since he taught it and made a boatload of money on that pattern. So yeah, I mean, if you just understand one pattern, and these things repeat all the time on different charts. So the same pattern might be on the euro yen, or in corn, or in the natural gas chart. So these patterns repeat, and really it doesn't matter. In fact, I would counsel you just take away this trading instrument, and this should be something that whatever this is, you would analyze it in the same way. If it was a corn chart or a natural gas chart or the euro yen, it's the same thing. So this is I guess the S&P, and you have this broadening megaphone top. So this looks, I think we're going to fall off a cliff, but I'm in the minority. We'll see how that goes. All right, guys, we'll see you back tomorrow, 4:30 Eastern Standard Time. Thank you very much for registering, and hope you got a ton of input, and we'll pick it up tomorrow. Thanks, Dwight.
All right, see you tomorrow, Mark.
Thank you. Bye-bye.